We really need to look for a bounce right now.
Essentially boils down to the question of what the hell is happening in Japan at the moment. It's a money glitch, if you want to call it like that.
Dog in the house while you see the burning house.
They can't afford higher yields, so they are pretty much trapped in a system.
And you can kind of see a steep increase in both of them. You're like, okay, well, let's just get it over with.
Hello, everyone, and welcome back to our second ever episode of the Diligent Teachings podcast. My name is Philip, and as always, I'm once again joined by my good friend Leo. Just on a quick note, Ayush won't be joining us today, unfortunately, since he's still in India as of right now. But yeah, anyways, there's so many things to cover and so many crazy events that have happened like the last week. So we thought we're just gonna do an episode anyways. But yeah, first off, how are you doing, Leo?
Man, should have expected that question. Yeah, how am I doing? Well, yeah, we've all seen crypto prices, right? So I don't think I have to explain how I'm feeling right now, but it's yeah, actually thinking about the meme, the dog in the house while you see the burning house, and
Quite
you're
accurate.
you're just fine, you're just fine in a burning house, and you're like, okay, well, let's just get it over with. That's how I'm feeling. Um, but anyways, besides that, had two really good weeks of building with you guys. Also, thanks to also our viewers, I would say. Thanks for the positive feedback. Also, really, really grateful for all the comments from the Bitenser community. Didn't expect
Exactly.
the traction that we got from the first video. We actually joked about it, like, okay, this is really bad. We need to really pick up our game, and then suddenly it got picked up by one of the community leaders from the Tensor Tau. And yeah, it's been amazing so far. But yeah, we're really aware that we need to improve on a lot of levels.
Still at the early innings,
So
yeah.
yeah, so you guys know we're working on all kinds of stuff from audio upgrades to video upgrades, editing upgrades. Everything is being worked upon. So guys, stay tuned for that. Be patient, but stay tuned. And also the positive and also negative feedback. Feedback is feedback, and you grow from that. So keep giving that
100%.
to us. Keep giving us feedback, honest feedback as well. Really, yeah, really, really nice. And yeah, let's just get back into the video. And yeah, man, I'm being rude. How are you doing, actually? So
I'm doing, doing
yeah,
good. As you
perfect.
already mentioned, been working quite loads like last couple of weeks, but yeah, we are happy that like the way the things are going right now. So couldn't be happier at that time, even though the market is crashing.
All
But
right. And
yeah,
we'll get into that, right? So yeah,
exactly, exactly. But yeah, as we already like briefly mentioned, today we got a very interesting topic at hand, in my opinion at least, which essentially boils down to the question of what the hell is happening in Japan at the moment. Further, we will also be discussing why they trapped in an sort of like an infinity loop, which is the so-called carry trade, and also why it is shaping the entire macro landscape itself. And also, more importantly, as I've already mentioned to you, Leo, Japan is just showing us the future trajectory of where like pretty much every other major global sovereign player is on right now. So the only difference is Japan is just 10 to 20 years ahead of the US and also Europe, but the path is ultimately probably the exact same. Maybe let's discuss what the famous carry trade actually is. It follows quite a
let's
straightforward
go.
and simple strategy. If you like, for example, an hedge fund, a bank, an institutional player, you can essentially borrow billions of yen at almost no cost. So you just like go out there, borrow yen. The next step is to convert it back into US dollars. And let's say you borrow, like, for example, 10 million or 10 billion yen. You directly convert it to roughly about 66 million US dollars, I think it is right now. After that, the third step is to invest those dollars into higher yielding US assets. So you basically um, can put your dollars to work, and you can either do that by buying US treasuries, which are yielding about 4 to 5%. You can also put it into corporate credit yielding, which is 6 to 8%, or even if you're just gonna buy the S&P 500, which has an compounded annual growth rate of 8 to 10% a year. You can pretty much, as we said, you can borrow at near zero cost. And yeah, the last step is essentially you pocket the spread plus the asset returns and sometimes even the FX gains. And that's exactly where this whole thing, or this money glitch, if you want to call it like that, becomes stupidly profitable, because you gain those 4 to 7% on the US assets. You subtract or minus those 0 to 0.5, whatever the borrowing cost is in Japan at the moment, and you essentially end up with a net spread of 4 to 10% free profit per year. And yeah, even if the yen is weakening during that time, you gain even more if you like convert it back the profits. If the S&P 500 rips, you gain from equity appreciation as well. And if the US yields stay higher than Japan's, you gain from the carry trade itself. And this is pretty much the three layer money machine that is currently in place. And Japan is just basically offering that. And but the caveat is this trade only works, and that's like the most important part. It only works when Japanese rates stay below US rates, and or if the yen stays weak or weakens even further. So that's pretty much like the whole build-up of the carry trade. And yeah, as you see, like probably that's where you like wanted to add on, Leo, as well. That leads to Japanese bonds.
Yeah, definitely. Like I think, yeah, for sure. I think everyone should be really, really
Hmm.
aware of the Japan carry trade and its effects. Um, Not only from a fundamental level, but also from an expectation level. What the market is kind of taking into account and considering right
Hmm.
now, because markets are always forward-looking, right? Um, and for our viewers as well, it's really important to acknowledge that we have been in a low interest
Hmm.
rate environment for such a long time, um, a decade, and a decade is quite a long time to have near zero slash at some
Hmm.
points for some countries negative interest rates. And right now, you actually see that quite a lot of funds, pension funds, sovereign wealth funds. So it's not on a small scale,
Hmm.
it's like on a global macro level, a trade that has been exercised and has been used
Hmm.
by those parties um, on a very large scale. And actually, what you're seeing now, and which is quite interesting, let me look at the
Hmm.
Japan 10-year bond
You
yield.
can you can essentially see it like everywhere nowadays. Like
Let
it doesn't
see.
matter which bond yields you're looking at. Japan just had like, and that's like the overall topic we want to discuss. It's absolutely the same what happened last week.
Yeah, fair. Fair. It's insane because I think you're now able to. Oh, you're now seeing a glitch. That's always nice. Um, but yeah, it's been insane. So for the last, well, if I go to the weekly right now, ba, 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 ba. So these have been the rates for Japan. Well, these are. I don't think this is really that accurate though. But you have to imagine that these, like this level,
Hmm.
was pretty much near zero, right?
Hmm.
And only now you've seen this steep increase, really a steep increase. And the thing with this, with the yields in Japan, basically, is that a lot of fund operations and
Hmm.
business models have taken lower rates in Japan for granted. for a really long time. And to all our viewers, Diligent Degens, we're going to talk about crypto. We're going to talk about, well, Degen stuff for sure. But I think this should be on the radar of a lot of, um, for our viewers, but also anyone else, is that we're really entering a new paradigm regarding
Mm-hmm.
macroeconomics and the way we're used to watching it. And well, if you look at the Japan bonds, it's just one piece of the puzzle that screams that
Exactly
we're
that.
really
Yeah.
entering. Well, I'm not going to say beginning of the end, apocalypse. Well, this is just all drama upon drama, right? We both can
Mm-hmm.
agree. But
Mm-hmm.
it is true that we really should take into account that what's happening now. Raoul Paul was mentioning it as well with, um, I don't know what the word for it is, but he expects also a lot of liquidity injections by from now till well 2035, just mainly
Mm-hmm.
because it's a point of no return, right? And we are now seeing the
Exactly that.
negative effects of it, and
Mm-hmm.
well, that has also been getting its well its effects on the crypto markets, right?
Mm-hmm.
Because
Just,
it's highly risky
exactly.
assets. So
Exactly. I mean,
yeah,
just as an example, um, last week there actually was like exactly that situation. If you look like at the Japanese government, which was I think it's called the Taikashi administration, was pretty much preparing a massive stimulus package, and that's like pretty much the reason why those yields blew out to multi-decade highs, as you already mentioned. I
yeah.
was just like looking it up
Oh,
as well
fair.
because I
Yeah,
found it
true.
on CNBC. And I think it is actually right now, if you look at like the 10-year bond yields, it's at 1.775. It actually like decreased a bit, but there was only like one time where the yields were a bit higher in the last, what is like 30 odd years. So I think like 20, like on in April 2007, it was a bit higher than that, which was like 1.87. But other than that, just yields were very very low, and that's like the most important lesson you will have there, because yeah, as I said, like it's an infinity loop that Japan is pretty much just caught into. It all boils down to the idea of Japan is owing too much money to pretty much everyone. At the end of March 25, the debt stood at, I think, roughly 8.8 trillion US dollars. And that's just like public debt sitting in an economy that's producing about not even half the amount that they own in GBT, which results ultimately into a debt to GDP ratio of 235%. And that's like one of the highest ever seen by any developed country so far. And
Insane.
yeah, and the thing is, they can't just afford normal interest rates on their kind of debt loads, because they can't afford 3%, they can't afford 4%, and not even 2% across the curve. Because the funny thing is, I just looked it up, every 1% increase in Japan's average refinancing costs them about like 85 billion US dollars in extra annual interest expenses. So that's pretty much, Japan has so many like short-term maturity debt, and it has to be refinanced every year, which is like 1.5 to 1.7 trillion US dollars every year. And yeah, that's pretty much like what this whole strategy is about in Japan right now, which is essentially government issues new bonds to finance the spending, and whenever the market doesn't want those bonds at low yields, the Bank of Japan just steps in, creates new money, so like essentially prints new money electronically, and buys back those bonds, so the prices stay high and the yields stay low, because they, as I said, like they can't afford higher yields, so they are pretty much trapped in a system.
Uh,
And
I've been uh, I've been checking like the upcoming events related to it, and I wasn't really
yeah,
able to find anything. Do you have any information regarding that? What should we kind of be looking for? Because I've been checking the macro calendar, but I haven't been.
in what terms you mean now?
Yeah, kind of events, interest rate decisions from the Japanese bank, anything related to it. I don't know. Or
I think
I'll
there's
just look it
none.
up right now. Could also be.
Yeah, I think there's none like right now as expected. But as I said, like the overall theme is just they have to refinance the debt that they have like every year, and if the yields spike too high, they just have to like refinance it at higher yields, and that just ends up in a catastrophical event sort of. And another thing is they
Not to,
have
by
like
the way,
a
guys, not to be doomsday players, right? We're saying
yeah,
catastrophical. Take it with a grain of
exactly.
salt or not with a grain of salt, but yeah.
100%. It's just like the overall theme we're seeing right now, but it's not like a, as I said, like no Sodom and Gomorrah sort of vibes. But yeah, I also created a little like visual I wanted to share with you guys, which is essentially pretty much
Oh yeah,
covering
nice. Can you yeah
this
just share
whole.
your screen? I would say. Just
Yeah, of course, of course. Wait, give me a second.
Also, by the way, guys, in the meantime, so yes, we're going to discuss the Japan carry trade because it's really relevant right now. And later on in the video, we're also going to discuss some parts of current markets, what's actually happening, what to look out for, and Bitenser Tau, of course. But so you guys know, we'll briefly be mentioning Bitenser Tau this episode, and the upcoming weeks to come, we'll be really deep diving into Bitensor Tau and its ecosystem. So stay tuned for that. It's not that we're suddenly not going to talk about Bitensor Tau. But for
Exactly. Yeah.
now, we're briefly going to mention some subnets, some interesting updates and news events. And yeah, for all the in detail Bitensor Tau research, stay tuned for the upcoming episodes, I would say.
Exactly. Can
Go
you
ahead, go ahead, Philip. Yeah.
can you already see my screen? Is it working?
Yeah, for sure. Yeah, yeah.
Perfect. Perfect. So yeah, that's as I said, like just a small little visual. So for probably our audience to better understand and have like a bit of like connection towards it. So what it ultimately boils down to was Japan sort of like got caught in an asset bubble burst, which was in 1991, I think it was. It resulted in that time. And as a result of that, they had to sort of like print their way out of it, which was essentially like a weak economy, was like the state of art at that time. So they started printing. And the thing is, with printing, it always gives you sort of like a short term relief to start off. But the thing is, if you take it too far, there's also called the law of diminishing returns, and that's exactly the same happening for currency debasement. And once you're in that loop, it's hard to get out of because after they had like that sort of like short term relief, they tried to stabilize their markets and also like their own government or like the situation, the economy in Japan. But the problem is by raking or like hiking those rates too fast or too aggressively, there's pretty much always breaking something somewhere in the global economy. Because as we already discussed, the carry trade is essentially Japan is giving you money for free. And if
And
that
by the way,
money,
sorry to interrupt,
yeah,
Philip,
no,
sorry
no,
to interrupt, but I saw that Japan is one of the largest bond buyers currently from the US, right? So
exactly,
just to
yeah,
give our viewers also, I guess,
exactly,
a a imagination of how significant Japan is regarding monetary
mm,
policy,
yeah,
it's it has been in the top three or top five of US bond buyers globally.
mm, mm,
So if Japan, correct me if I'm wrong, but if Japan decides to alter its monetary policy, that will
yeah,
have major effects on US rates as well, right? Because if they decide to
exactly.
sell, well, rates will increase in the US as well, right?
Exactly, exactly. That's one part, and also, um, as we already discussed, the carry trade sort of has a yeah sort of correlated demand towards the US dollar side because by buying yen and converting it back to US dollars and buying US equities, for example, it has like a huge demand side to it, and if that breaks, it is exactly the thing we're seeing right now. Global economy responds to it in a negative way because you can see Japan is, as I said, like sort of trapped in a system, but it also has effects on the global system, and the only way out of that is by panic printing more, which further weakens your economy, and then you still have to like print more money to get that short-term relief, and it just like ultimately leads in a situation where you can see like the sell-off
As we said,
immediately. You can see
sort
liquidity
of
flying
trapped
out, and
by
just has an overall impact
printing
on
more
the
and
whole
more and more
market.
and more money.
So, and the economy
It
is
is not
very
getting
important
any
to monitor that, and
real
also
benefit
know
out of
where
it
to look,
anymore.
and
So
also
doesn't really
know how
enhance
to
anything you're doing.
adjust
Sort
your
of,
investment
and
strategy.
that's the problem.
Definitely.
If you see
Yeah,
those
it's
events happening, or if you
yeah.
see like
I was just looking up
the
like
routes that
data
they are, bless you,
regarding the Japan carry trade,
the route
and
that they're on,
Mhm.
and
it
so
has been relevant for this week because
it's
rates
important to
started
monitor.
spiking due to the announcement, right?
Mhm.
Yeah, I don't know if you want to continue
Exactly,
or we can
exactly.
just
It
we
was the
just need to
stimulus
yeah.
package.
Yeah, we just need to monitor this, and also for our viewers, we'll be monitoring this, and also in
Let's
the
focus on
upcoming
the markets right now.
period, we'll
I think
be
we already covered
going
like
live
pretty
with
much
a set of
everything we wanted
macroeconomic
to on that
indicators.
end.
Yeah, I checked as well. Philip will be responsible for that as well. Yeah, guys.
Exactly.
So yeah, what has been going on actually? More of a midterm to longer term perspective on the market.
Hmm.
Mhm.
Besides, well, as I mentioned to you before, yes, we're in crypto, but we're really trying to engage our viewers into having and broadening their whole investment horizon.
Mhm.
And macro is a big part, a significant part of it, right, Philip? So
Yeah,
yeah,
100%, 100%. Yeah, that's pretty much what we wanted to cover as well. As you said, I'll be focusing on like the sort of like top 10 indicators, macro indicators that also have a huge impact on the digital assets or crypto space. Because as you said already a couple times, crypto is macro in a sense in terms of like liquidity, and yeah, you can just like sense it in times like this. Japan bond yields, you can see like the sell off immediately. You can see liquidity flying out, and it just has an overall impact on the whole market. So it is very important to monitor that, and also know where to look, and also know how to adjust your investment strategy.
definitely.
If you see those events happening, or if you see like the routes that they are, bless you, the route that they're on, and so it's important to
Yeah,
monitor.
fair. Should be good. Yeah, guys. So yeah, what has been going on actually this last period? It has been it has been insane. I I just checked the monthly candle in Bitcoin so far, like month to date, and well, if you're looking at it, what I've seen in the market and from the Bitcoin price, we haven't seen this a significant drop in Bitcoin. So currently we're at 20.85% on the month, and we were
Mhm.
actually around 25%. And we haven't seen such a monthly drop since 2022 June,
Mhm.
which is significant, right? 2022 June was the first candle that was actually larger on a monthly time frame than we've gotten right now. And well, let me just share my screen, and again, you guys can kind of see what I'm talking about. So actually, now it's 20.78%, but
Mhm.
all other major drops, well, 17%, 14%, 8%, but the intra was lower. I can give it that. And
Actually, I think
actually,
August 24 wasn't it like the time that that Japan also was sort of trying to
yeah, yeah, that was the first unwind. So yeah, to all our viewers, the relevancy
hike
of
rates. Yeah.
Japan, it's kind of like August 2024 all over again.
Mhm.
However,
Mhm.
you're not seeing it in the equity markets that significantly. To give you an example, the VIX kind of gouges investor sentiment.
Mhm.
I'm not going to get into detail what the VIX is, but for you guys to understand, in 2024, this was the VIX at the Japan carry trade. So sentiment was that risk off that the VIX went to, well, 60. And every time
Mhm.
actually that you point into a value of 60 or higher, you're most definitely going to reach a bottom in
Mhm.
markets. And right now we're only at a value of 23. So, well, according to the fakes, things could get worse, but yeah, fakes is never really a forward-looking indicator in the sense, well, it's implied volatility, but it's not a measure that you should use to say, okay, this is the bottom, because it doesn't really happen that often that fix actually reaches the value of 60, right?
Mm-hmm.
So if, yeah, you just go back to Bitcoin, it's actually insane that, um, yeah, that we reach this value. And well, what are we gonna do now? We've seen a lot of crypto Twitter and analysts talking about the 50 weekly SMA. And of course, guys, you can talk about the fact that we've broken it and it's a bearish trend. And while I agree with that, from now on is really to see, okay, what is going to happen now? And the first thing that everyone has their eye upon is the rebound, right? Where
Mm-hmm.
everyone is kind of continuing to talk about, okay, when are we going to get a bounce? When are we going to get a bounce? Because it's not bouncing. And well, currently crypto Twitter is screaming for a bounce and everyone's saying the bottom is in. Well, that could be the case. I agree with that. We're very near, but exact price as well. You just never know, right?
Mm-hmm.
The good thing is I checked like on-chain balances as well, and it was looking actually quite interesting. So these are actually wallets that I having in front of me of more than 1K in balance. So kind of like whales, you could say. And the 1K wallets and the 10K wallets, so that's this, actually have been seen as more of smart money buyers, because, well, you can kind of assume that a wallet that holds more than 10K
Mm-hmm.
is a smarter investor than someone who invests, well, 0.01 Bitcoin, right?
Mm-hmm.
Um, they're more informed and well-informed investors. We've actually seen from 1K wallets that they have been accumulating. Well, okay, right now we're seeing a major dump. So
Mm-hmm.
it begs the question, okay, who are these sellers? Because this says nothing about the characteristic of the buyers and the sellers, right? This is all
Mm-hmm.
actually to do with just the wallets. But the wallets can change between person. There could be an old wallet loading off all of its 1K Bitcoin, and there can be a
Mm-hmm.
new wallet coming in, right, with 1K. So we don't actually know who these people are until, which
Exactly.
is interesting. Okay, let me just continue with saying, okay, 10K is also increasing.
Mm-hmm.
So you've got the 1K increasing, but well, right now we've seen a major dip.
Mm-hmm. So you
10K, which
basically,
is increasing.
yeah, so you basically have like new wallets getting new whale wallets getting thrown there out like on a daily basis, sort of. So you have like
Yeah,
big
so,
money
well,
investing in this
yeah,
place.
yeah. So this is only like the number of addresses holding more than 10 Bitcoin or
Mhm.
holding more than one Bitcoin. And you can kind of see a steep increase in both of them. 1K is
Exactly.
kind of like, well, dipping right now. So we need to see if this
Yeah.
trend holds. But what is
Mhm.
more interesting, if you compare it to the 0.01, they're kind of stabilizing, more than 10 going down the drain,
Mhm.
more than 1 going down the drain, more than
Mhm.
0.1 going down the drain. It's just
Mhm.
going lower.
Mhm.
And the really interesting part about this is that most of the time, all of these smaller wallets are short-term holders.
Mhm.
Like
Mhm.
most of the short-term holders were meant to be retail. So 0.01 Bitcoin, zero point 0.1 Bitcoin, 1 Bitcoin. That's retail. That's assumed to be retail, right?
Yeah.
And the interesting part is those are mostly short-term holders, and they only
Mhm.
buy when prices are high and they sell when prices are low. And what the fascinating part is, and here comes the caveat, and this is kind of what really intrigues me, and well, um, kind
And
of
also,
wants me
and also,
to,
yeah,
yeah,
and also what you just were mentioning there, like those addresses or those wallets having like more than 1K Bitcoin, I think it was, wasn't it?
yeah,
It is sort of inversely like correlated to the Bitcoin price, isn't it?
Yeah, exactly, exactly.
Like
So you see,
exactly, yeah,
and
pretty much.
the interesting part is with the smaller wallets, you see a positive correlation with price. So if price goes up, the smaller
Exactly.
wallets they buy. When price goes
Mm-hmm.
down, the smaller wallets they sell, right?
Mm-hmm.
Which is
Yeah.
kind of hand in hand with short-term holders. So you have
Mm-hmm.
your mom and pop, your hairdresser, your barber, your granny, they wanna buy some Bitcoin. Well, they're gonna buy at the
Get off
peak and
the
they're gonna sell
market
at the
when the
bottom.
neighbor tells you.
Yeah, that's always the case, right? And right now, what we're seeing, and this is really interesting, you see this same positive correlation with prices high. You see short-term holders peaking. When prices are
Mm,
low, you see it going down. So it goes, yeah, it moves with the trend until now.
exactly.
And this is the
Mm,
interesting part. Until actually a couple months ago, and I really need to check if this is a glitch on Glassnode. I really need to check this. But this has
but
been
fair, we
increasing
exactly, but,
in,
but we like fair enough. We have been checking that like for the last couple of weeks, haven't we? And it's
yeah,
pretty
yeah,
stable, like in terms of where it's heading. So
yeah. So the thing is also if you go to Google Trends, and I would suggest every viewer to see this, is that
mm,
normally the short-term holders are highly correlated with Google Trend searches for Bitcoin. So if Google Trend
mm,
searches go up, then you see the short-term holder chart also going up. Has a very
mm,
high explanatory factor. Only now you see them totally diverge for the first time. You see actually Google Trend searches for Bitcoin at an all-time low, while short-term holder supply is going up. So the
mm.
question is, are these actual short-term holders, or are these people just new holders entering the market, right?
Exactly. Smart money entering the market, in high demand and in high leverage, pretty much
Yeah,
gaining
fair. And
exposure in terms of uncertainty and that.
yeah, and the interesting part is that long-term holders have been offloading, which is a perfect explanation of, okay, well, you see long-term holders offloading, and
Mm,
normally they offload right before you're going into a peak.
mm,
So, well, to give you an example, here they started offloading as well before the major parabola. Here they
mm,
started offloading before the major parabola. Here they started
mm,
offloading before the major parabola. And every time here they started offloading before the major parabola, and only now it's accelerating. But
mm,
the interesting part is, while this could be an indicator of potential peak or potential bottom, it's very
mm.
noisy and it's very laggy and sticky. So
Yeah, fair,
the
fair.
only the
But
only
just
doubts
like
you can
from a
have, yeah,
yeah, but just like from a psychological aspect as well, I think I've heard that like in a previous podcast somewhere, it makes total sense for you to sell when you think that the market is like at the best level there is right now, because you will get the most for your, in that term, like from it for your Bitcoin. So you will
yeah,
get the best price for the least money or least Bitcoin you have to spend. So it makes total sense that that is like correlated as well, because those people know that those. I'm not a fan of like the 4 year cycle anymore, but I think those people know that it is the best way to spend their Bitcoin when they would get like the most out of it. Obviously,
yeah,
you don't sell
fair.
if the market is correcting much or if the market is going down. So yeah, makes perfect sense for me as well.
Yeah, and this is 155 days, right? So we need to
Hmm.
take this with a grain of salt. So it's not necessarily long-term holders.
Yeah,
But it's, yeah, it's still considerable. And
still
well,
dedication there.
yeah, and what we should think about is that we're now kind of seeing the change of hands, right? And that is
Hmm.
really good for our viewers, is that, well, this is increasing at an enormous rate. And
Hmm.
I still really am skeptic about if this is a glitch or not.
Hmm.
But okay. So
But I think the
far
combination,
on-chain metrics, I guess.
yeah, I think the combination makes it. Like if you only look at short-term hold supply, it don't mean that much. Like obviously, but
Yeah.
if you combine it with the other indicator you just showed, it would make perfect sense for me as well if I would look at that like that.
Fair. Yeah, let's just get to the other topic. So what has happened with the price drop is saying, I think that it got a lot of people by surprise, not necessarily drop itself, but the speed of the drop, right? The acceleration in the drop that we had. And to kind of give you an example, let me share my screen for another, and this is a,
I think you
yeah,
still
this
got your hand
is,
raised, by the
yeah,
way, Leo.
yeah, what?
I think you still got
What?
your hand raised on the podcast lab. Just so you know,
On the what?
on like the podcast, Leo, you still got your hand raised there
Oh, fair. Okay, wait.
on the camera.
How the hell do I turn it off, man? I'm such a
Yeah,
boomer
it's gone.
sometimes.
It's gone.
For all our boomer watchers, no hate, no attack. My bad. Everyone is welcome at Diligent DJ. Yeah, but yeah, let's just continue. So what we're seeing currently in the market is a drop at a speed that we haven't seen for a while, right? So the combination of the percentage decrease and the speed. And besides major whales offloading, besides that trend now occurring, is that actually what I think a major contributor to everything we've experienced from this downturn is the event on the 10th of October. So what happened on the 10th of October? Well, I think many of our viewers will have experienced that. Is that there was a major liquidation cascade in leverage positions on the 10th of October,
It
which
also
has,
overlapped when we met, wasn't it? Funny
yeah,
story.
yeah, yeah,
That's
funny
like when
story.
we
That's
started. That's when we started working towards that.
true. And well, on that day, Binance was actually having, um, during the event or prior to the event, there was a DPEG of a certain stablecoin, which cost, well, which a lot of people point towards that that's the cause, that there was a DPEG of a stablecoin, that suddenly a dollar wasn't valued at a dollar, but at 60 cents, which caused a major liquidation event around various centralized exchanges. But okay, anyways, the thing is with this is that, to be honest, and feel free to get into with your opinion, Philip, but we haven't really seen a lot of news regarding market makers and hedge funds really going bankrupt due to this move. While
Not really, and that also. I was skeptic about that, to be fair, because I mean, obviously you do your risk management and stuff, but that decrease in market cap, it was just too fast, and there's so many leverage in the markets, or there was so many leverage in the markets, that I would be very very surprised if some of those like probably smaller hedge funds or leveraged traders didn't get fully liquidated or like debunked at that time. So I tend to agree as well. I think that there is still not like the bottom in, and I think there's still some players maybe out there who are not like honest about it yet.
yeah, yeah, to be honest, and that's what really caught my attention when, well, Tom Lee got on on a certain news channel, and he was mentioning that the crash we are witnessing could be really related also, like not necessarily that the crash was due to October 10th, but it is certainly an explanatory factor. So what we have seen is that we haven't seen the extremity of what happens yet in potential. And I think that we will only see market makers and major hedge funds and investment funds coming out with the fact that they might have been liquidated after they've offloaded their positions that need to be liquidated, right? Because they need to pay off their debt holders. Um, and potentially their clients as well.
Exactly. Yeah.
So you will always hear it after the fact. And I think after the interview, you saw a significant increase in the speed of the drawdown. And I think that I'm not saying Tom Lee was the cause of this, his interview, but it really gave, in my opinion, the market an idea of, okay, maybe this isn't only major whale selling, but also just the consequence, right, of the major 10th of October
Forced,
breakout.
forced, exactly. Forced liquidation or forced selling because they have to
Definitely,
pay their dues,
definitely.
sort of.
But yeah, so that's
No,
basically
makes
something to
sense.
keep an
Yeah.
eye on, guys, and to really kind of give you an idea of what is happening. Because from a fundamental point of view, I think it's far too late to say that we're really entering a bear market. While I do agree that we should really look on at the strength of the current upswing that we're gonna get. So currently, what we're seeing is that Bitcoin has been going down for 4 weeks straight, right? And we really need to look for a bounce right now and see and gauge what the strength of the bounce is. And then we can continue and reassess. But for now, it's just waiting for the bounce. And besides that, you can have your opinion. You can try to guess what the market is going to do, but it won't help you. It's better to respond than to predict, right? And right now,
Yeah, fair.
it's just waiting on a certain bounce.
And also, I think it's important to, as we already said, and that's, I think, like the whole story behind watching macro for the space as well. Because if you look at, like, for example, poly market right now, BOJ, that they are like cutting rates is, I think, at 0.1% at the
Yeah.
moment. So they're probably just going to stay the course. And but on the other hand, you see that the US is, as you, I think, mentioned back 2 days ago, that they are like a very, very high likelihood that the Fed is going to cut rates in December. So you still have to take those things into consideration. But as you said, you don't trade based on emotions, or don't trade based on your gut feeling. Trade on what the market is providing you with.
So yeah, something to keep in mind, guys. We're really going to be working on the Tensor Tau deep dives. We just really want to do it well and proper, just to get everything in. So stay tuned for that. But some interesting things I've seen, and yeah, starting with, well, we've done some major deep dives, right? And me personally, the things I don't really still get and understand, first of all, is while BitTensor Tau was fairly launched, right? The question that comes to my mind is we have, so far I've seen two major players, institutional players, who were quite early at BitTensor Tau, which is Polychain Capital and the Digital Currency Group. And there has been a lot of rumors flying around in the BitTensor ecosystem quite for a while now, that all of those, not all of those, both parties were actually able to pre-mine or get an OTC deal quite significantly in the market. And I'm doing a bit more research on that, because while I am very positive about the growth of the ecosystem so far, from a tokens perspective and decentralization perspective, it's really, well, relevant for us also to be aware of that, right? And I'm checking that, and maybe someone of the community of the Tensor Tau could talk about that. Maybe someone knows, but leave it out in the comments. Because yeah, I've been going through that, and that got my attention. So yeah, it's one of these posts that I saw recently, which, yeah, still me trying to go on chain and try to find information regarding the amount of Tau that Polychain Capital and Digital Currency Group is holding, which Digital Currency Group is related to Yuma in that sense.
Yeah.
So yeah, just an open discussion, really curious. about that. To continue, yeah, there are a couple of subnets that caught my eye as well. Ridges has been going down in price quite significantly, which makes sense if you're going 30x, right, in a couple of months' time. So I'm not personally really looking at price right now. What I'm really looking forward to are their updates. And interestingly, what I find um, really interesting is that for every miner and every, well, engineer that uploads their own model for Riches AI, you can kind of see how they score on all the different benchmarks. And that's going to be something that they're going to be adding on the website. So yeah, looking forward for that. Um, another subnet I've been having my eye on is synth. And while I've been, are you familiar with synth, Philip?
Haven't been checking into it yet. No.
Okay, so synth is basically a trading algorithm. If I'm correct me if I'm wrong, guys. But so far, from the research I've done, it's a trading algorithm that allows everyone to contribute to the efficiency of the trading algorithm, and they're trading on poly market. And the insane part is that they 10x their initial capital in, well, look at this, in such a short and brief period, in like I think a month or 2 months, which is really, really significant. And I don't know, I want to really look into the tokenomics of the subnet token, the alpha token, because I really want to get a know-how of if subnet tokens are able to stake in a way that Synth can, well, use their trading algorithm to generate staking yield for subnet tokens. But that's really interesting. And besides that, I saw also another subnet, and that's Score. And maybe you've seen Score, Philip.
I
I
think,
don't know.
yeah, I think you were mentioning that to us already. They already got like Reading, yeah, there it is, British
Yeah,
football club on there
yeah,
already.
indeed. So
Quite
they're growing,
interesting.
quite steadily as well. And well, for everyone who doesn't know, Score allows for visual AI model recognition. So what they do, they're for now, or they started with focusing on football visual data. And what they do is that they allow everyone to make a model that could help track and analyze patterns in individual player movements, in formatting and structure of teams, which could help and assist professional football clubs in their technical abilities and their technical and tactical abilities to improve as a team, which is really handy because currently only the top clubs are able to, well, afford this
Yeah, and just
AI,
exactly, and
this AI,
just utilize
this
like
AI and data driven model. So
exactly, yeah.
Score is actually able to provide this service to football clubs at 1/10 of the cost mentioned by the CEO of the company, right? So if that's actually correct, I would really love to have data on this because it could be quite significant. And these are all the models that are kind of like competing for, well, making the best recognition patterns. So they're all competing. And well, the best model earns 1.5K daily. It's really a discrepancy between Ridges AI and Score because Ridges AI is currently around 50K and Score is around 1.5K, but still, it's really fascinating what they're doing. And they also not only going to go to football, but they announced a major partnership with a petrol station in Europe. I don't know if I'm able to find it. Let me see. Yes, here it is with Avia petrol stations. So it's really significant, and they're mentioning that they're onboarding quite a lot of partnerships as well in the upcoming period. Which, yeah, we kind of see the actual B2C benefit of BitTensor Tau coming into fruition. And in the upcoming period, we'll also be addressing like what the future will be like for these companies, because it's a totally different structure, right? While before, a company should worry about employees, about their shareholders, you kind of have a different dynamic right now with not necessarily equity holders per se, but subnet tokens, subnet holders, subnet token holders, your miners, so your engineers who are working on a yeah, kind of on a freelance basis
Exactly.
for your project. So yeah, we're gonna get into that next week, guys. Stay tuned for that. And also one last thing to really address to take a look at for the BitTensor ecosystem is this website. It's learnbittensor.org, and it's really cool because you can see globally the miners that are currently active on BitTensor Tau, and it's really a wonderful tool because you can kind of see the progression from BitTensor Tau in 2021 to 2022 to 2023, 2024, and now 2025. And
You
can
guys from
kind of
Netherlands really smashing it out the park there, Hannah.
What?
I said you guys from Netherlands really smashing out of the park there.
Yeah, apparently. Look, well, yeah, it's insane. Well, my region, for example, has 182 miners. So for
That's
all my
insane.
Dutch, for all my Dutch BitTensor Tau lovers, apparently we're quite a lot in numbers. So yeah, hit me up if you're a
Leo
BitTensor
didn't want to
Tau.
mention it. Leo didn't want to
Um,
mention it, but he has like 182 minus up there.
Yeah, fair. But yeah, it's really nice to see, guys. So yeah, what I want to say, next week and the upcoming weeks, we're going to dive deeper into the Tensor Tau. We're also trying to upgrade our audio and our film, yeah, our video quality. Again, many thanks to the support. We really appreciate the help and the positive
Amazing stuff.
feedback. Also, the more negative feedback, I remember like one guy commented that we were basically shilling BitTensor Tau, which, well, we're just really positive about BitTensor Tau, right? But 100% agreed in the deep dive. We need to be critical about everything that we're going to make content about because we're diligent for a reason, right?
Decent.
But yeah, the thing that right now, I really want to do research upon is Polychain's involvement and DCG's involvement in BitTensor Tau as well, and also the concerns related to them potentially dumping on, or not dumping, but yeah, they're just selling wallets related to Polychain, for example, sold quite a
Exactly.
bunch when we were going to like $500, $600 between that. So yeah, if someone knows anything about this, it would be really appreciated to come
Reach
and
out
maybe
whenever.
address this. And until then, stay tuned for all the other videos. And yeah, I don't know, Philip, if you want to tell or say something before we well continue with our life, I guess.
I think you covered pretty much everything already. As Leo already said, thank you so much for all the support and all the positive and also, yeah, potentially more negative comments. But we keep everything in mind. We try to improve week in, week out. And yeah, just very happy with the situation it is going right now. And we can't wait for the future projects and future updates and videos. So very happy with the situation and just want to
Perfect.
build out stuff that you guys enjoy. So as Louis said, always feel
Yeah.
free to reach out. Always feel free to comment any
Fair.
ideas for improvement. And yeah, other than that, we're just gonna keep working and keep posting stuff. So you guys are always on the edge and always well informed on that end.
Fair. Okay. Well, yeah, thank you guys again, and I'll catch you on the next one.
Awesome. Thank you so much. Bye bye.
Bye, guys.